When you do the channel checks specifically in China, what are they telling you about consumption and services sector growth?
Well, the way that we're seeing this in China is there are challenges, of course, because of the property sector not doing as well as it had been in prior years. So the ability also for stimulating growth may not be as strong, but also the desire to have growth above, quote, the long-term normal is also not so strong. So I would expect that this year we'll see overall growth and demand being, I would say, flat-ish, where we end up with something around, say, 5% for overall real GDP growth in China. It could be that consumers slightly underperform there this year, but over the longer term, the fundamentals there are still strong.
David Morton here. Great to see you again. It's been too long. Welcome back to the show. So, beyond the hard stats and numbers, a lot of it is going to be down to psychology as well, which MasterCard, I'm sure, is also very, very interested in. And what I'm talking about here is inflation expectations. All right. And we could be in a situation where this is the reverse of deflation. It's not, look, I can wait till next week or next month because it might be cheaper. It's, I better spend now in case it gets more expensive next week or next month. What does that play with the bulk of consumers here in Asia? Can you tell?
Well, the other part that you can put into this mix is also relative prices are moving so much. I'll give you a good example. If you look at, say, travel, if you have a major increase in the cost of travel internationally, and we know that supply is, of course, curtailed anyway because of restrictions, and therefore there's just a lot less availability. Even as we go through the recovery, you could end up seeing prices for travel that much higher, and therefore maybe you also see shifts in consumption patterns where there's more being spent by consumers that would normally have gone abroad for that spending, doing it domestically because the trips are too expensive. And maybe it is spending on domestic travel or maybe on other goods, because the key part of the whole story here is that it's meant to be that last year was an odd year out. It was the first time in 27 years that we saw the spending on goods outpacing spends on services. Its ratio went up for the first time in literally nearly 30 years. Now, the other way around, as we go back towards services again, should happen, but the jury is out on exactly how willing they are to do that.